Good morning, students. Okay, so today we'll begin with the third chapter of banking. Chapter's name is Employment of Funds. Okay, so in first chapter we studied about what is banking, what is banking structure all about, how banking the structure of banking works, what are the different types of bank, the different classification of banks, the structure of banking system in India, what is the definition of bank according to Banking Regulation Act 1949. Then in second chapter we dealt about the different types of accounts: saving, recurring, current. Okay, so in this chapter we are going to see what are the different types of funds that a bank has. What are the different types of fund that a bank has? Funds means money. Okay, so in this chapter we are basically going to deal about the different type of funds. Funds means money. Okay, so what are the different types of funds and where do they allocate these type of funds? Okay, different type of funds means the money they have. Okay, the money they have, and where do they spend, where do they allocate this money for the betterment of the business? Okay, understood? So if you see here, after reading this unit you will be able to understand what are liquid assets and their uses for liquidity. We will not do each and every part topics, we will not do each and every topics. Many topics we are going to delete. We will not study each and every topics. Only important points I am going to deal with. Okay, only important points I am going to deal with. Okay, clear? Understood? So let us start with this chapter. Okay, so again I'm saying we are in this chapter. In first chapter we dealt about the introduction of bank. So what is bank all about, the definition of bank, the structure of bank in India, how Indian banking system works. In second chapter we dealt about the different types of accounts that are there. Okay, savings, current, recurring, many types of accounts are there. And in this chapter we are going to see the different funds that a bank has and how do they allocate or spend these type of funds. Okay, so the first type of fund is liquid assets, that is cash in hand, cash with RBI and cash with other banks. Okay, first of all, what do you mean by the word liquid? Liquid assets means, for example, if you are having 10 rupees in your pocket, just please listen. If you are having, I hope you all are there. Yeah, good morning everyone. Yeah, okay, liquid, the word liquid asset, let me tell you what do you mean by the word liquid asset. If I am asking any one of you what is your present liquid asset, if I'm asking anyone of you what is your present liquid asset, liquid assets means, for example, if you're having 10 rupees with you, okay, if you're having 10 rupees in your pocket and for example 100 rupees in bank, okay, 100 rupees in bank, so these type of funds which are already converted into cash, which are there, which can be converted easily into cash, or which are already converted into cash, which are already in cash mode, are known as liquid assets. Okay, so what are liquid assets? If I ask you what are liquid assets, any asset which can be easily converted, any asset which can be easily converted into cash, or which are already converted, which are already in cash mode, in cash basis, are known as liquid assets. Okay, understood? If for example you're having 10 rupees with you at your home, then that will be your liquid assets. If you're having 100 rupees in your bank, that is your liquid assets. Okay, understood? So for banks, if I talk about, here we are talking about banks. So for bank, what are liquid assets? The cash they have in their bank, first of all, this one, cash in hand. The liquid assets for banks are, number one, cash in hand, which means the cash which they are having in banks. Number two, cash with RBI. Now you know what is RBI? RBI is the Central Bank of India. So they have to keep a certain amount of cash. Whatever total cash they are having, each and every banks, they have to keep certain amount, a part of their amount with RBI, with Reserve Bank of India. Okay, and cash with other banks. If you go for investment, if one bank is investing in other bank, that is also a type of liquid asset because it can be easily converted into cash. Okay, it can be, you can anytime go and sell that investment and take back money. Okay, so there are basically three types of liquid assets. Number one, cash in hand. For banks, this I am only talking about bank because this subject is banking. So for banks, if I talk about the different liquid assets that a bank has, is number one, cash in hand, number two, cash with RBI, and number three, cash with other banks. Okay, clear? So let us see what are the liquid assets. A bank's balance sheet has two sides. As you all know, balance sheet you all have not started, but I'm telling you, balance sheet means your assets should always be equal to your liability. Okay, whatever asset you have, it should always be equal to your liability. Understood? For example, if you are having 10 rupees with you, you should always be liable to pay 10 rupees to other people. So this 10 rupees should always match with 10 rupees. I'm just giving an example. Balance sheet you will start, I guess, final account in accountancy you all are going to start. But balance sheet, just remember one thing, since you all are new to this, balance sheet means the financial position of the business. And how do you ascertain the financial position of the business? By knowing the assets and the liability, and the asset and liability should always be equal. Okay, so the balance sheet, as you can see, it has two sides. One is assets and one is liabilities. Okay, the investments loan given by the bank constitutes the assets of the bank. Now if I ask you what are the assets of the bank, what constitutes the assets of the bank, what will be the assets of the bank? Any investment done with other bank. Like for example, if a bank is investing outside in some other banks, so in future they will get back money, yes or no? In future they are going to get back money. So from anywhere, if they are going to get back money, that will be taken as, that will be addressed as assets. Okay, so for banks, if a bank is investing with other bank, that will be considered as assets. Okay, and now what is the liability for the bank? Liability means if you are depositing if you're depositing money in your bank account, so that money belongs to you. That money belongs to you and not to the bank. Bank has the responsibility to take deposits and to give money whenever demanded. You can withdraw money at any time you want to. Okay, understood? So the money that you are depositing is the liability for the bank. Why? Because that is not bank's money, that is customers' money. Bank has to pay, they have to pay whenever it is demanded. Okay, understood? So what are the assets for the bank? If you're going for investment, if you're investing in other banks, if you're investing in some market securities, that will be assets. And what are liability for the banks? A customer's deposit is considered as liability for the bank. Okay, let us see. Liquid assets consists of, see here, number one, cash in hand. These are the different liquid assets. Okay, cash in hand, money at call and short notice, balances with RBI, balances in current accounts with other banks, interbank deposits due within 30 days. Okay, so number one is cash in hand. Whatever cash you are having, whatever cash is left with you in your bank is your liquid asset. Understood? Money at call and short notice, whatever I'll deal with this. What is call money, what is money at call, I'll deal with this. Okay, there's a introduction about this money and call. Number three is balances with RBI. If you have to keep certain amount with RBI, with Reserve Bank of India. Okay, so the whatever balance is there with Reserve Bank of India will be considered as liquid assets. Okay, it will be considered as liquid assets. Is it clear? Good morning, good morning. So please repeat. Liquid assets, can't understand. Jia, I hope you're clear with liquid assets. Jia Gupta, I hope you're clear with liquid assets. Okay, I'm repeating this again. Yeah. Okay, so liquid assets, as I said, whatever cash, any asset that can be converted into cash, that can be easily converted into cash, or which are already converted into cash. For example, your balance in bank account is liquid asset. So for banks, if I talk about specifically bank, what are liquid assets for them? The cash they are having, the investment they are having with other banks, the money they are, balances they are keeping with RBI are all liquid. Okay, okay, okay. No, students, I'll do this class again in Google Meet, okay? Maybe on Wednesday or something like this. Once I complete this syllabus, I'm repeating this again. Once I complete this whole chapter, I'll do this chapter again in Google Meet, okay? So in Google Meet, I guess that will be easier for you all to understand, okay? Here in YouTube, it's not possible to communicate with the students. So in Google Meet, what will we do? We'll have an interactive class and there we can have a good discussion, okay? For timing, just listen. I'll just once we complete this chapter, we'll do this chapter again in Google Meet, okay? So for timing, just listen whatever you are understanding and this we'll complete this again in Google Meet, okay? Is it clear, everyone? Okay, good. Now let us see, what do you mean by money at call and short notice? Money at call and short notice. Money at call and short notice. Money at call and short notice means sometimes bank they run short of money. Sometimes what happens, banks they run short of funds. They run short of money. They don't have money in banks. So what they do is they ask from other banks to give them loans. And this happens within 1 to 15 days. The money has to be returned between 1 to 15 working days, not more than that. Only 15, maximum 15 and minimum 1 to 15 working days the money has to be returned. This is the meaning of money at call, which means whenever banks demand money from other banks, they can give them as loan, but that money has to be returned in between 1 to 15 days. Okay, clear? See, it's clearly written over here. Call money deals in overnight funds. Overnight funds means, for example, if today I am running short of funds, if my bank is Allahabad Bank or Indian Bank, if I am running short of fund and I'm asking, then today at night, today in overnight, I have to ask funds from other bank like SBI or Bank of Baroda or any other bank, okay? And that money has to be refunded. That money has to be refunded within 1 to 15 days. Clear? Okay. Is it clear? So again, I'm repeating, money at call. Money at call means, it means whenever a bank is running short of fund, they go to other banks to raise their funds. And this money, if they get overnight, this money has to be refunded within 1 to 15 days. See here, it's written 1 or 2 or maximum 2 to 14 days. But it's most probably 1 to 15 days. Okay? Clear? That money has to be refunded, given back to that bank between 1 to 15 days. Okay? So this is the meaning of money at call and short notice. Clear? Good morning everyone. Good morning. Yeah. Okay. Next, let us see what is cash reserve ratio. Cash reserve ratio. The meaning is CRR. We say in short form. If I'm asking you what is the full form of CRR, the answer should be cash reserve ratio. Okay. Cash reserve ratio. Clear? So what do you mean by the word cash reserve ratio? Cash reserve ratio means whatever total deposit that a bank is getting, total deposits from customers, total deposits the bank is getting, they have to deposit a part of the total deposits with Reserve Bank of India. Okay, a part of the total deposits with Reserve Bank of India. For example, if the total deposit of State Bank of India is rupees 100, I am just giving an example. They deal in crores, millions total deposit, but I'm just giving an example. If the total deposit of for State Bank of India is 100 rupees. So out of that 100, there's a percentage set by RBI. There's a percentage set by RBI. What they have to do, they have to deposit or keep a certain amount in Reserve Bank of India. I'll show you the present rate. You can see the present rate over here. See here? Yeah. See the present rate? Cash reserve, recently it's 3%. Okay, it's 3%. So for example, if at any point of time, let's take State Bank of India. State Bank of India at any point of time is having 100 rupees as total deposits. Okay. So out of that 100, 3% means 3 rupees. 3 rupees they have to keep. They have to keep balance in Reserve Bank of India. Every bank. This is for every bank. Okay. 3% they have to keep with Reserve Bank of India. Okay. Clear? Understood? So CRR means cash reserve ratio, which means a part of total deposit that commercial banks they have to keep with Reserve Bank of India. See, it's written, scheduled commercial banks are required to maintain with RBI an average cash balance. Okay, an average cash balance means at any point of time some amount of balance should be there with RBI, with Reserve Bank of India, for every commercial banks, the amount of which shall not be less than a specific percentage. Specific percent, I told you. What is the percentage? See here, the percentage is 3%. Okay, what is the percentage? It is 3%. What is the percentage? The percentage is 3%. Okay, of the total. This is important. NTDL. NDTL. I am writing this in chat box. I am writing this in chat box. Net demand and time liability. Net demand and time liability. NDTL. NDTL means the total deposit. Total deposit. The total deposit that a customer is getting, no matter fixed account, no matter current account, no matter recurring deposits, no matter savings deposit, no matter fixed deposits, total of all the deposits, total deposits that a bank has, out of that total deposit, a percentage, which means 3%. Presently it's 3%. It is set by RBI. RBI sets percentage. 3% has to be set aside and it has to be kept as balance in Reserve Bank of India. Clear? Only definition is important, not more than that. Okay, don't have to study much. Clear? Yeah. Next is liquidity management, or ALM. ALM means asset and liability management. Okay, asset and liability management, or in other words, liquid management. I am writing this again in chat box. ALM means asset liability management. Clear? ALM means asset liability management. Clear? Yeah. See what is written over here. Banks collects money from saving deposits, fixed deposit, recurring deposits from their customers. Okay, and this constitutes the liability for the bank. Now see, as I said again, I am repeating this again. A bank's balance sheet has two sides. One is asset and one is liability. What are assets? If you invest with other bank, that will be asset, and the deposit that you are getting, recurring deposit, fixed deposit, whatever deposit you are getting from the customer, will be liability. Why liability? Because that is not bank's money, that is customer's money. Clear? So that will always be any type of deposit. Any type of deposits for bank will be considered as liability for the bank. Okay. Now what do the bank do? Banks lend this money to their customers, which represents their assets. Now whatever deposit they get, what is the work of bank? Take deposits and lend money. Okay, whatever deposit they are getting, out of that deposit they are giving loans to public. They are giving loans to public. Okay, so now this loan that they are giving to public, that will be asset. Okay, because they are giving loan and they will get back interest. Okay, so this will be considered as asset. This will be considered as asset for the banking business. Why? Because they are taking deposit, any type of deposit is a liability, and out of that deposit they are giving loans to public. This loan they are giving, they will get back money with interest. So this will be considered as asset for the business. Okay, clear? An ideal cash represents opportunity lost to the bank, where in case of shortage of cash, banks need to borrow at higher rates, which results in higher cost for the bank. So if at any point of time, this line means if at any point of time, if the cash is idle, if the cash is not being used, the deposit that you are getting, you have to use that deposit, you have to give loans, you have to invest, then only an asset will be created. Or else what will happen? You will only get deposit and you have to pay them interest. That is not possible. You take deposits and you give loans, you lend money, you go for investment, then only asset and liability will be maintained. So if at any point of time the cash which you are getting, the deposit that you are getting, is kept idle, is kept undisturbed, is not being used, is not given as loan, any part of cash, what will happen? The bank will suffer losses, the cost will increase. Okay, they will be higher. Then on the other hand, what they have to do? They have to go for taking loans from other banks. This is what I was talking about, call money. Overnight they have to take loans from other bank if they are not giving loans to other people, to other public. Understood? So they have to take loans from other bank at higher rates, and by this what will happen? The cost will go up, the total cost of that bank will go up, and for this they have to suffer losses. So at any point of time, cash should not be kept idle, it should always be given as loans, done investment with that deposit that they are getting from general public. Clear? So this is the meaning of liquid management. Liquidity management means you get deposit and you give loans, you go for investment. It should not be kept with the bank. The money that you are getting, the deposit that you are getting, bank they are getting, it should not be kept idle, it should not be kept unused. It should always be invested, be given as loan. Then only your bank will not have to take loans from other bank at higher rates. Clear? This is the meaning of liquid management. Okay, understood liquid management? Clear? Understood liquid management? Please repeat yes or no. Student, please respond yes or no if it's clear or not, liquid management. Yes, okay sir. Okay, then just we'll do it till here. Okay, and next class we will go to other topics like investment in securities and all. Okay, just keep it till here. Okay. Okay, thank you students, and have a good day and God bless. Be ready for your next class. Avik sir will be taking. Thank you students.